Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, here it is, very close to the end of the year, and I've cleaned my charts up. I've removed all lines except for one of the most important lines, which is the 20-day moving average, and that's that blue line right there. In 1996, Alan Greenspan coined the term irrational exuberance. And what I'm seeing in the market here is a combination of optimism from the new administration that's coming into Washington to an overexcited end of year rally, which is also known as the Santa Claus rally. And so when you put this all together, I'm going to coin the term overextended rational exuberance. And that's exactly what we're seeing. Most analysts have been calling for the bubble to burst for months now. And what you're seeing right now is, again, the continued optimism from the new election from November 8th, and it's continuing to rally right here. So what I'm going to do is put out more of a risk management report to show everyone how to more or less protect profits and protect against a downturn in the market should it occur. I'm still forecasting that in January we're going to see the regular cycle of market activity to the downside. But before we do that, I want you to pay very close attention again to the price action and how it relates to the 20-period moving average. I'm going to put a double arrow right there. Back in July, we see that the price of the market moved up and away from that 20-period moving average. We call this the rubber band effect. When the market moves or the price moves away from that moving average, it has a tendency to snap back to the moving average. Again, hence the reason why we're calling it the rubber band effect. Now, if I take that double arrow without changing the length of that arrow and I move it over here, which is another point in which the rubber band was being stretched, you could see we had a slight pullback towards that moving average. And if I move that arrow once again to the most current price action, you can see that the price has seen a wide divergence from that moving average once again. Now, this is a very, very tricky time in the market because many people want to go ahead and buy and buy and buy. But you have to be very careful here now, because if I back up a little bit, you'll see from a weekly chart that when the market goes in these vertical moves here, you can see that the vertical up leg on the weekly chart can also be measured. You can see that the length of these up legs are pretty much the same in length, and right now we're reaching the end of that upward leg. Now on the weekly chart, let me zoom in a little bit further so you can see something. The volume has been going up, which is bullish, but as soon as you see a drop in that weekly volume, that's when you need to move your stops up. That's when you need to start taking some profits in stocks that are overextended. That's when you need to start looking at maybe some bearish funds or some contra funds that work inversely to the Dow or other major indices. Now, I'm going to remove this line and I'm going to project what I believe we will see for next week, and that's going to be a continuation of this upward move right here just for a short while. I think that volume is telling us that the buyers are still in force. But again, as soon as we see a significant drop in this volume with any kind of a short candle, a doji, a spinning top, that's when all bets are off on any short-term long bull positions, and then we start to look for the correction or the downturn. So that's the diamonds. If we look at the Russell 2000, you could see the same thing. This rational exuberance. Here we go. Vertical price moves, a little bit of a pullback, another vertical price move. So I think we're going to see just a little bit higher here and then a possible pullback in the Russell 2000 as we snap back towards that moving average. So keep an eye on that. I'll leave that line in place for next week so that we can see what happened relative to the forecast, and then we'll keep moving week by week. Now, if you look at the Qs, that's ticker symbol QQQ, the power shares. we see that the power shares are at a level of resistance here. So I'm not as bullish on the Qs as I am with the Russell 2000. Although I think we could go up to test that once again, I don't think we're going to break it. I think we'll pull back to fill this gap right here. It's a small gap, and then we'll have to reevaluate at the end of next week. I'll look at the spiders, ticker symbol SPY. See, same thing applies. We have the rubber band being stretched. We have a long run of green candles here. We call this a stale green light. That's 1, 2, 3, 4, 5 green candles in a row. You can see that we rarely have that long of a stretch of green candles. But you'll notice that the volume in the spiders is starting to drop. So I think we'll see, again, a little bit of an uptick here early next week. And then I think we'll see a pullback towards that moving average. Again, I'm still broadcasting these reports on a risk management level where I'm cautioning people, I'm waving that yellow caution flag so that people don't get super long at the top, because then when we have January, again, if you look at the Russell 2000, the spiders on a monthly chart, you'll see that when you go back and look at January, February, March, you'll see that the sell-offs usually occur at the beginning of the year. This right here is January, February right here, then the sell-off. Right back here, we see that there was a little bit more of an extension to the upside, but then we had the big sell-off in 2008. We had in 2015, we had the January, February, March right here, and then we had the sell-off. So we could see, again, like I said in the forecast, we could see a little bit higher, but be very, very defensive and make sure you're watching your downside. Now, if I go to the VIX, ticker symbol VIX, and this is a monthly chart, you'll see that we are on 20-year lows. This is a support level that we do not want to ignore, because if I zoom in to the VIX on the daily chart, you'll see that whenever we get down to this level, we tend to bounce and go up. So again, this is a red candle, very, very close to a bearish engulfing pattern. So I think the VIX is going to drop just a little bit early next week, and then I think the VIX is going to spike up. Now remember, the VIX is a contrarian indicator to the S&P 500. So if the VIX pulls back a little bit early next week, the S&P is going to rally. We talked about that already. But the VIX starts rallying, like we see here, the S&P could start to pull back. And we talked about that as well. If you'd like to know what we do at The Market Guys, simply go to The Market Guys website and click on the video tab right there. That will bring you to a library of videos that we call market shots. These are very short videos, 5 to 7 minutes long, and you can scroll down and get your lessons on your schedule. Right here, second row down to the right, we have the rubber band effect, which is what I've just described to you in this report. Go there, understand it, learn it, and apply it to your trading strategies, and you'll see that your success will increase because your confidence will also increase. I've always told people your confidence works in direct proportion to your profits. So if you learn more about the signals and what they mean, you can, again, develop your confidence along with your skills for trading. This is AJ Monty with The Market Guys. Thanks for joining.
For almost 3 decades, AJ Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep-it-super-simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for The Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guys 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.